The day I almost quit trading forever. One cold November morning I powered up my platform and felt nothing. No flicker of anticipation, no steady hum of purpose. Just a dull heaviness behind my ribcage. For months I'd been inching through the rubble of blown accounts, rebuilding myself trade by trade, telling anyone who asked that I was finally turning the corner. But the truth was simpler. I was exhausted. Exhausted by the discipline it took to stay by the memory of every dollar I'd torched in the name of by the quiet fear that maybe I wasn't born for this after all. That morning, after one planned loss and two perfectly ordinary scratches, something inside me whispered, "What if you just stop?" I closed the charts, slid my chair back, and stared at the empty wall. The silence felt suspiciously like relief. I imagined never again riding the 3 a.m. adrenaline wave, never again watching a red candle chew through a stop I'd moved just a little, never again explaining to friends why I was still chasing this wild, unpredictable craft. For the first time since my first deposit, quitting felt possible. Almost logical. This is the story of that day. The day I almost walked away forever, what finally snapped inside me, and how, against every cynical impulse, I chose to come back with clearer eyes and a different heart. What follows is my personal experience, shared for reflection and education. Not financial advice. Trading carries real risk. Never trade money you can't afford to lose, and always do your own research. Chapter 1. The moment the screen went dark. I didn't plan a grand gesture. No dramatic slam of the laptop lid, no symbolic yanking of cables from the wall. I just moved the cursor to the little red circle in the corner of my platform and clicked. A soft chime announced the disconnect, the chart candles froze in mid-glide, and the familiar glow collapsed to a blank desktop. For a few seconds I sat absolutely still, hands hovering uselessly above the keyboard. The sudden quiet inside the room felt thick, almost physical, like a dense fog that had seeped in the moment data stopped streaming from the servers. I hadn't realized how much noise my platform made even when nothing was happening. The subtle tick of prices refreshing, the hum of my own breathing picking up whenever a candle twitched. Now there was only silence and the low tinnitus whine of blood in my ears. Across the apartment the radiator hissed. Outside, tires whispered over rain-slick asphalt. Ordinary sounds I'd tuned out for years clawed their way back into consciousness as if to remind me that the world didn't care whether your USD found support or sliced through it. I turned in my chair and let my gaze roam the room. Half-read trading books stacked by the window, a whiteboard smudged with last month's must-follow rules, coffee mugs arranged like a graveyard of caffeine-fueled promises. My phone buzzed. Another market alert I'd forgotten to disable. And I felt an involuntary twitch in my fingers, the old Pavlovian urge to act. I ignored it, flipped the device face down, and pushed back from the desk. My chair squeaked in protest, a tiny shriek that sounded exactly how I felt. I walked to the kitchen, filled a GL back with tap water, and leaned against the counter. The cold rim pressed into my palm. I took a sip and waited for something. Panic, regret, maybe instant relief. To rush in. Nothing came. Instead, memories drifted up like ghosts. My first green streak when I'd sworn I was destined for stardom the night I wired emergency funds at 2 a.m. because I couldn't bear closing the day and read the fifth account's final implosion, when I'd watched the balance tick to zero and thought, well, that's fitting. They floated across my mind, each scene tinged with the same note. Exhaustion masquerading as ambition. I realized I'd spent years sprinting on a treadmill, convinced that intensity and purpose were the same thing. A sudden heaviness in my throat made me set the GL back down. I braced my hands on the cool laminate, shoulders hunched, breathing slow. I pictured never opening that platform again. No more risk parameters to recite like a catechism, no more 4 a.m. alarms because the London session might deliver salvation, no more end-of-day heart palpitations when a candle blew past my widened stop. My pulse settled at the thought, and that frightened me more than any drawdown ever had. Because if quitting brought peace, what did that say about the life I'd built around trading? Had I confused torment for passion? Had I been chasing freedom only to chain myself to screens and spreadsheets? I wandered back to the study. The monitor still reflected the room. My face faintly visible in the black glass, eyes ringed by fatigue. I placed a finger against the screen, half expecting the platform to flare back to life, begging for one more try. Nothing happened. The system had obeyed my single, deliberate command. Disconnect. And in that thin space between disconnection and whatever came next, a thought surfaced. Gentle, almost compassionate. Maybe walking away isn't failure. Maybe it's the first real choice you've made in years. I sat on the floor, back to the wall, knees pulled close, and let the idea breathe. Quitting meant letting go of the identity I'd welded to my trading handle, the story I told at gatherings when people asked what I did. It meant releasing the fantasy of a single lightning strike trade that would vindicate every sleepless night. But it also meant surrendering the guilt, the secret fear that I was one relapse away from blowing up again. A different kind of silence settled over me. Less like fog, more like open air. I felt no urge to fill it. Not yet. I would give myself this day, maybe more, to decide whether the platform stayed dark for good. For now, it was enough to sit in the stillness and admit I didn't know what came next. Outside, the rain eased. In the hush that followed, I heard my heartbeat. Steady, unhurried, no longer sync to the pulse of a market I wasn't sure I loved anymore. And I understood, with surprising clarity, that whatever path I chose, it had to begin with this unheard memo to myself. You're allowed to pause. You're allowed to question everything. And so I did. Chapter 2. The weight of walking away. Morning drifted into afternoon while I sat on the floor, knees folded, palms open on my thighs like I might catch some answer falling from the ceiling. The platform remained dark, but my mind didn't. It filled the room with questions I'd trained myself to mute whenever price was moving. What if you never get back the money you lost? What if all those chart hours add up to nothing? Who are you if you're not the trader anymore? I tried to picture life without the screens. Real weekends, dinners that didn't pause for mobile alerts, conversations where I looked people in the eye instead of over their shoulders at an imagined ticker tape. The vision should have felt liberating, but a surprising heaviness settled in my chest, like I'd yanked out the central beam in my house and only now noticed the roof sagging. Trading hadn't just filled my days, it had become the scaffolding of my identity. I stood, stretched stiff legs, and wandered to the hallway mirror. Stubble shadowed my jaw, eyes sunken from too many pre-dawn sessions. If I quit, I thought, this reflection might soften. But would it feel like me? Or like someone I don't recognize? The weight of that uncertainty pressed harder than any drawdown. Markets, for all their chaos, gave me a scorecard every day. Up or down, right or wrong. Outside that feedback loop, success became hazy. Could I bear a life without instant verdicts? Without the dopamine punch of a green candle sprinting in my favor? I poured another GL back of water and paste. Memories surfaced. Moments when trading felt pure. Sketching a new idea on paper, the quiet focus of waiting for price to drift into a zone I'd mapped hours earlier, the satisfaction of exiting exactly where I'd planned. Those memories glowed warmer than the adrenaline highs. They were small, steady lights, easy to overlook until now. Maybe, I realized, I hadn't fallen out of love with trading itself. I'd fallen out of love with the story I'd forced it to carry. That every win proved my worth and every loss revoked it. For the first time all day, I felt a flicker of curiosity instead of dread. What would trading look like without that burden? Could I come back to it the way a craftsman returns to wood or clay? Attentive, unhurried, content to shape slowly? I pulled a spiral notebook from the bookshelf, one I'd bought months earlier and never opened. On the first page I wrote, if I return, on whose terms? The answer that spilled out surprised me. On mine. Quiet, deliberate, sustainable. No hunger for applause, no racing the clock, no rescuing self-esteem with leverage. I set the pen down and exhaled. The weight in my chest eased a fraction. Maybe walking away wasn't an end but a reset. Stepping back so I could choose whether to step forward differently. The platform could stay dark until I trusted that choice. Evening light slid across the floorboards. I hadn't traded a tick, yet the day felt heavier than any marathon session. The weight of walking away wasn't just about abandoning effort, it was about grieving the identity I'd built and deciding whether to rebuild it on firmer ground. That grief, I realized, was necessary. It signaled I was finally honest about what trading had become to me. And what it could no longer be. I closed the notebook. Tomorrow, I would take a longer pause. No charts, no finance podcasts, just time to listen for what part of trading still whispered, come back, and what part hissed, run. Whatever answer emerged, I vowed not to shackle it to ego or fear. Only then, I thought, could I know whether the platform should remain dark. Or light up again under a clearer, kinder set of rules. That night I slept deeply, dreamless, as if my mind, relieved of constant market noise, finally had room to breathe. And when dawn edged through the blinds, I woke not with urgency but with a quiet, unfamiliar question. What do I want this day to teach me? Charts or no charts? For the first time in years, the answer wasn't obvious. And that uncertainty felt, astonishingly, light. Chapter 3. A day without candles. I'd forgotten how much space a day holds when every minute isn't measured in ticks. The next morning I resisted the reflex to reach for the phone. I left it face down on the nightstand, screen dark, alerts muted. Instead I laced my shoes and stepped into drizzle that smelled of wet pavement and eucalyptus from the park a few blocks away. For months I'd moved through the city like a ghost. Eyes on charts, earbuds piping in market commentary, mind mapping entry zones over whatever scenery I passed. Now, without that extra overlay, everything looked sharper. Neon green moss climbing a brick wall, steam curling from bakery vents, an elderly man coaxing a dachshund across a puddle while humming off-key. None of it held profit potential. All of it felt real in a way last week's price spikes did not. At a cafe I'd never noticed. Partly because its facade wasn't chart-shaped. I ordered coffee and sat by the window, notebook open, pen resting on the first blank line beneath yesterday's question. On whose terms? I wrote the date, then let the pen hover. A thought surfaced that startled me with its plainness. I missed the charts already. Not the noise, not the scoreboard, but the quiet geometry of them. The way price paints time, the puzzle of structure unfolding tick by tick. Trading, stripped of my ego, was still beautiful. What I feared wasn't the craft itself, it was the version of me that kept hijacking it for self-validation. So I asked another question. Can I separate the craft from the craving? The answer, I suspected, would be found not in theory but in practice. Slow, careful practice that refused to let urgency dictate pace. But first I needed proof I could inhabit a day without leaning on the crutch of just checking the market. Could I sit with stillness and not feel irrelevant? Could I let curiosity rise without lunging for execution? I closed the notebook and walked. The drizzle had thinned to mist. Somewhere a church bell chimed 10, a reminder that London was opening but I wasn't. A familiar pang flared. Fear of missing. Then faded. Price would move whether or not I watched. My life, astonishingly, continued anyway. By noon I found myself outside the library. On impulse I slipped inside, wandering aisles until a title caught my eye. Mastery in Chess Endgames. I'm no chess player, yet something about devoting hundreds of pages to the slowest, subtlest phase of the game felt apt. I settled at a desk and thumbed through diagrams of lonely kings and pawns shuffling toward inevitable conclusions. Progress there isn't measured in flash, it's a grind of precision and restraint, the tiniest misstep punished 10 moves later. The parallel was obvious. I jotted a note. Trading is an endgame discipline posing as a sprint. That evening, back in the apartment, the platform icon sat on the monitor like a door I wasn't sure I wanted to reopen. I didn't click it. Instead I reviewed the day in my journal. Walked 4 miles, tasted coffee instead of swallowing it mindlessly, read about incremental advantages in a game centuries older than futures markets. I noted how my pulse stayed steady even when I pictured the euro blasting off without me. Then I asked the question I'd been circling since the screen went dark. Do I return tomorrow? My pen hovered, but no clear answer came. And that felt okay. For once I didn't need immediate resolution. I turned off the lamp and stared at the city lights flickering beyond the window. Somewhere out there, screens glowed in other apartments, other traders chasing or conquering whatever number defined their worth tonight. The market would close, reset, and beckon again. It always did. But I finally understood I could choose the terms of my engagement. I could meet the market with the same deliberate patience I'd admired in those endgame diagrams, or I could fall back into the frantic loop that had nearly driven me out for good. The difference wouldn't be in strategy but in the posture of my own mind. Tomorrow's decision could wait until tomorrow. Tonight I felt the unfamiliar weight of possibility. Heavy, yes, but no longer suffocating. If I returned, it would be because the craft still called me, not because I needed the scoreboard to tell me who I was. I slipped the notebook under my pillow like a quiet vow. Whatever path I chose next, it would begin with listening instead of lunging. And for the second night in a row, I slept without dreams of candles burning red through the dark. Chapter 4. Reopening the platform, one rule at a time. Morning light pooled across the desk where my powered-off monitor waited like a silent question. 12 hours earlier I'd sworn I wouldn't decide until today, yet here I was. Hands resting on the keyboard, heart steady but curious. I breathed in the coffee steam and asked myself aloud, craft or craving? The answer needed to feel clean. I pictured 2 futures. In one, I quit for good and redirected every ounce of obsessive energy into some safer pursuit. Maybe software design, maybe teaching. That version of me looked calmer, but also dimmer, as though a vital filament had been removed. In the other future, I traded again. But not as the adrenaline addict I'd been. I saw measured sessions, smaller size, weeks shaped by patient expectancy instead of daily verdicts. That version looked uncertain yet alive, the filament glowing at sustainable wattage. Curiosity tipped the scales. I pressed the power button. The machine hiccuped awake, fans whirring, lights blinking like distant city windows re-illuminating after a blackout. My platform icon pulsed. Before clicking, I opened the notebook and drew 3 columns across a page. Essential, optional, forbidden. Under essential I wrote. Single market S only for 90 days. Maximum 2 trades per session. 0.5% risk per position. Pre-written entry exit rationale. Under optional. Journaling feelings after each trade. Screenshots for later review. Walk around block between trades. Under forbidden I etched in bold strokes. Moving stops. Adding size mid loss. Checking candle during open trade. Trading after daily max loss 1%, social media bragging or lamenting. The list wasn't revolutionary. It was simply precise, a fence built low enough to climb if I truly chose. But high enough to make me pause and notice why I was climbing. Then I set a timer for 30 minutes. During that window I allowed myself to open the platform, not to trade, only to observe. Chart candles flickered back to life. Your USD, crude, Tesla. But I toggled everything off except the SAMP mini contract. One symbol, one 5-minute chart, no indicators beyond volume and a 20-period moving average. The simplicity looked almost naked, but the naked chart mirrored my stripped-down intentions. Price drifted sideways in a tight, pre-session range. Nothing to do, which was perfected, forced me to practice Rule 0. Wait. I sipped coffee, shoulders relaxed, timer ticking down. 10 minutes left. A mild impulse fluttered. Maybe just peek at Apple earnings? But I caught it, smiled, and let it pass. Craft, not craving. When the bell rang, volatility expanded in a quick burst. A textbook pullback formed to a level I'd mapped months ago but rarely respected. My checklist whispered, valid setup approaching. I noted entry, stop, target on the page, and waited for confirmation. Heartbeat quickened yet remained within sane range. Like steady drums, not alarm sirens. When the candle closed where I'd planned, I clicked buy, size so small it felt almost ceremonial. Instantly my eyes flicked to the Pandal column. Old habit. But Rule 3 blocked the view I'd hidden that column before market open. Deprived of its familiar dopamine lever, my brain had nowhere to go but the price action itself. A strange, clean focus settled. Here is the trade, watch it, manage it, be done. Price wobbled, dipped toward my stop, held, then drifted higher. Nothing dramatic, just the incremental logic of supply and demand. 10 minutes later, target filled. I exhaled as though I'd been holding breath underwater. The platform flashed green numbers I couldn't see, columns still hidden, but they no longer defined the moment. What defined it was the unbroken chain of rules from start to finish. I set the mouse aside, rose, and walked the hallway while my pulse receded. In the kitchen I poured water, tasted minerals instead of metallic fear. Back at the desk I logged the trade. Followed plan end to end. Felt mild nerves acknowledged, not indulged. Outcome. Profit, but confidence attached to process, not result. The timer still had 5 minutes. I closed the platform before temptation to take another quick one whispered its old song. 2 trades allowed, yes, but I sensed the line between practice and hunger. One was enough for day one. I stared at the powered down monitor. Same black GL back as yesterday, yet now it reflected a face carrying a different tension, one threaded with cautious hope. I flipped to the notebook's back cover and wrote a single sentence. Today I proved I can return on my terms. Outside, clouds parted, glazing the buildings with late morning sunlight. For the first time since November's fog, brightness felt deserved. Not because I'd won, but because I'd kept a promise when nobody else was watching. Tomorrow the market would open again, indifferent as ever. But I would meet it not with frantic expectancy, rather with this quieter agenda. Protect the craft, protect the rules, protect the mind that finally believes it's worthy of steadiness. I closed the notebook, let out a long breath, and realized the weight had shifted. Walking away had felt heavy, but walking back, slowly, intentionally, felt lighter than I'd dared hope. And that, I thought, is how new chapters begin. Not with thunder, but with one small click that says, yes, but only if we do it differently this time. Chapter 5. Building a new rhythm. The next morning I woke before my alarm, mind clear, pulse steady. Strange how absence of dread feels almost like excitement when you've lived in panic for years. I brewed coffee, but instead of hustling to the screen, I sat at the window and watched dawn stain the rooftops pink-gray. The city was yawning into gear, unaware of its role in my new ritual. 10 minutes of stillness to remind me life exists beyond the candlesticks. Only after the final swallow did I power up. Platform, notebook, timer. Same sequence as yesterday, but today the novelty had faded, and with it the bubble wrap protecting my resolve. A quick flicker of impatience surfaced. Come on, where's the setup? I felt my fingers twitch toward the news feed, craving stimulation. I recognized the telltale emptiness, the impulse to manufacture urgency. Instead of clicking, I leaned back and counted 5 slow breaths. The twitch passed like a weather front, leaving the sky of my mind a shade calmer. An hour slid by. Price wandered aimlessly, brushing my pre-drawn levels without offering an invitation. Old habits itched. I imagined cycling through other markets, hunting for action. But the single chart rule held me in place. At 10:17 the pattern materialized. A measured pullback into the moving average, volume tapering just so, the whole thing textbook tidy. I felt the surge, but it was thinner now, like tea brewed twice. I logged my rationale, set the order, and entered. This trade didn't glide elegantly. It jittered in a tight band, flirting with my stop, testing the welds of my new discipline. 10 minutes stretched to 20, then 30. Each candle closed a little higher, a little lower, a little nothing. The market seemed to whisper, "Will you bail if I bore you long enough?" I stared back, unblinking. Patience isn't flashy, but it is loud in the head. Every minute of waiting roared with the memory of past impatience. Eventually, momentum sighed and drifted toward target. A tiny beep signaled exit. Profit so modest it wouldn't cover lunch in Midtown. But my grin was irrepressible. Not for the money, for the fact that boredom hadn't bullied me out of my plan. I wrote that down. Stayed in even when nothing happened. Victory of stillness. I spent the afternoon away from screens, walking the riverside path where gulls kited over murky water. Halfway through, my phone buzzed. An alert I'd forgotten to silence flashed that the sand had reversed sharply. An older version of me would have sprinted home, frantic to capture the move or mourn the missed riches. Instead I read the notification twice, shrugged, and pocketed the phone. Missing a trade no longer felt like missing oxygen, it felt like missing a bus. Another would come. The week unfolded in that slow cadence. Many hours of inaction punctuated by the occasional, carefully executed trade. 3 small gains, 1 equally small loss. Emotionally it felt flat in the best way, like the hum of a balanced engine. Friday evening I tallied the numbers. Barely a 0.25% growth. And laughed aloud at how tiny triumphs can cast such long shadows of peace. Yet the real rhythm emerged outside market hours. I reinstated friendships neglected during my screen glow years, shared dinners where I didn't once glance at futures quotes, found a second-hand guitar and let calluses bloom on fingers once cramped around a mouse. Each non-trading moment strengthened the cords anchoring me to a life where equity curves weren't the sole measure of worth. Of course, temptation returned. Mid-month, a news shock jolted volatility sky high. Twitter brimmed with traders boasting double-digit wins. My chest tightened, hands warmed with that old fever. The cursor hovered above the order panel, but the timer ritual saved me. I set 5 minutes on my phone and simply watched the candles whip. By the time the alarm chirped, the urge had ebbed, leaving the market wilder but my rules intact. I closed the platform early that day, proud and a little shaken, like someone who'd watched a favorite drink slide past at a party and chosen water instead. 30 days in, I printed a statement. A shallow upward slope. No fireworks, no collapses. I pinned it above the desk, right next to the columns of essential, optional, forbidden. Underneath I scrawled, "Consistency is a quiet graph." Every morning since, that line reminds me why I came back. Not to chase crescendos, but to compose steady measures in a longer song. And sometimes, in the hush before the open, I feel a gentle gratitude for that November day when I nearly quit. Because walking away taught me the difference between wanting to trade and needing to. Now, each session, I choose. And choice, I've learned, is the real rhythm. One deliberate beat at a time. Chapter 6. The first real test. 6 calm weeks can lull anyone into thinking the monster is tamed. My graph kept inching higher. Nothing spectacular, just a gentle stair step that felt sturdier than any previous rocket ride up. I'd celebrated discipline, praised patience, even started to believe I possessed a new immunity to chaos. Then earnings season arrived. I'd penciled bright red circles on the calendar for the big tech releases, knowing volatility would spike. My rules allowed trading those sessions. But only if the setup was picture perfect. No heroics, I reminded myself while grinding fresh beans before dawn on Apple's report day. Yet as the opening bell neared, I felt old electricity crackle through my nerves, the same current that once fried every circuit of judgment. The first candles erupted like fireworks. 10-point swings in seconds, order book flashing neon. I sat back, hands off the mouse, whispering the checklist aloud the way a diver rehearses breathing. Price whipped straight to my pre-marked zone, hesitated, then snapped back. A classic fake out. My plan said wait for the retest. My pulse said now. I hovered over the buy button. Every sense tunneling onto the chart. When a memory tore through. The fifth accounts collapse on another earnings morning, stop moved once, twice, then obliterated. I saw the old monitor glow red, felt the chair dig into my spine, Tasted the metallic panic. The ghost of that day stood behind me, breath hot on my neck. My finger twitched away from the mouse. I set a 30-second timer on my phone. An emergency brake I'd drafted in the forbidden column but never used. If impulse floods, the rule read, hit timer, breathe, reassess. The digital seconds pulsed. By the time they ran out, price had blown past my would-be entry and reversed violently. Potential winner? Maybe. Potential account grenade? Definitely. I exhaled so hard my shoulders shook. But the market wasn't finished testing me. Mid-session, futures eased into a textbook pullback. Dulled volatility, clear structure, everything calm again. The setup hit every bullet of my checklist. Still, my gut vibrated from the earlier adrenaline scare, a tremor of distrust toward my own perception. Could I act when action was warranted, or had fear handcuffed me forever? I zoomed out, confirmed higher timeframe context. No glaring news, volume normalizing. Craft, not craving, I murmured, and entered with my modest size. The trade drifted in my favor. Slow, orderly, almost polite. 10 minutes later target filled. Profit small, heart steady. This was the difference. Taking risk on my terms instead of letting risk hijack me. I closed the platform after that single execution. One trade was enough, more would have been audition tapes for ego. The afternoon stretched blank before me. I surprised myself by not filling it with chart replays. Instead I biked to the lake, legs burning pleasantly, air sharp with autumn leaves. Halfway around, a notification pinged. Tesla had spiked 60 points on its call. Twitter was frothing with triumph and ruin. I smiled, pocketed the phone, and pedaled harder, lungs drinking cold wind like water. That night I opened my journal beneath dim lamp light. I wrote. Use timer, impulse dissolved. Proof the rule works. Took qualified setup despite residual fear, respected exit. Missed monster Tesla move and feel fine. Then, a confession. Old ghosts aren't gone, they just knock quieter. My job is to keep the door locked. The week rolled on with smaller tests. A friend boasting triple-digit gains, a chat room pundit calling me too cautious, a sudden data release spike that sliced through dozens of traders' stops. Each time the itch to prove myself scratched inside my ribs, but the 30-second timer, the columns on the wall, the memory of empty accounts. Together they formed a shield. Still, I knew one test remained. A losing streak. Gains test ego, losses test soul. It arrived the following Monday. 3 straight red trades, flawlessly executed, yet all losers by chance. My chest tightened as the third stop hit. But instead of chasing redemption, I closed the platform, walked to a cafe, and scribbled on a napkin. 3 planned losses equal 1 planned day. I ordered tea, not coffee. Caffeine felt like lighting matches near petrol. Walking home I realized the first real test hadn't been about market fireworks at all. It was about bearing witness to the surge of old circuitry. Adrenaline, envy, shame. Without obeying it. I had passed, not by winning big, but by preserving the quiet graph. That evening I reopened the statement pinned above my desk. The slope was gentler after the losing day, but intact. I drew a tiny upward arrow beside it and wrote. Test survived, confidence earned, not borrowed. Then I shut the notebook, turned off every screen, and let the apartment fall into darkness lit only by street lamp glow. The same glow that once accompanied panic, now illuminating steadiness. Tomorrow another bell would ring, another ghost might knock. But tonight I finally trusted that I could greet it with my timer, my rules, and a rhythm forged from almost quitting. And choosing, deliberately, not to. Chapter 7. The week everything turned red. By Wednesday morning the platform's daily summary looked like a stoplight locked on crimson. Monday. 3 small, rule-perfect losses. Tuesday. 2 more, identical in size, identical in discipline, identical in frustration. Now a third pre-market coffee steamed beside me like an anxious locomotive, and the ledger read -1.8% for the week. Well within risk parameters, yet loud enough to rattle my thinner self-trust. Old reflexes prowled the edges of my focus. Bump size, shorten target, grab something green just to shut this noise down. They whispered while the candles glowed, urgent as sirens. I answered with the 30-second timer. Thumb tapped start, eyes lifted to the ceiling, breath counted out. When the screen blurred back into view, the impulse had shrunk. Still prickly, but manageable. Craft, not craving. The first valid setup of the session printed a tight flag into a prior support. I entered, stop preset, hands folded. Price knifed straight down, pierced the stop, and moved on without a twitch of mercy. Loss number 6. I felt my jaw clench, forehead pulse. A tiny drumbeat of come on. The daily max loss sat 2 trades away. It was only 9:47 a.m. I stood, pushed back the chair, and walked to the kitchen. Not to flee, but to test the rule that movement resets the mind. Cold tap water tasted metallic. I let it linger on my tongue, then swallowed the rusted discouragement with it. Back at the desk, a second setup brewed. Cleaner than the last, volume tapering nicely. I took it. It stopped out within 8 minutes, surgical. The ledger slipped to -2.4%. My line in the sand. Max loss day. Cursor hovered over new order. Just muscle memory, no conviction. I clicked the upper right X instead. Platform dark. Room silent. My breathing loud again. In the notebook I wrote big across the page. Stop trading. Day saved. I underlined it twice, angry lines slowly softening into something like acceptance. Then I closed the journal, grabbed my jacket, and stepped outside. The city smelt of wet stone and distant diesel. I walked nowhere in particular, forcing my stride to match the pace of passing clouds. Each footfall repeated a mantra. System, not self. Probabilities, not proof of worth. A busker strummed a tune off-key, children tugged at autumn scarves, a courier cursed his handlebars. None of them knew the market was red. The irrelevance of my week's pandal to the world spinning felt oddly comforting. At a riverside bench I reopened the journal. Beneath the morning scrawl I listed truths. I followed every single rule. The streak remains within statistical expectation. The urge to recover evaporated once distance replaced screen glare. Therefore, nothing is broken. Simple logic, yet the knot in my gut needed to see it in ink. I sketched a tiny graph of equity dipping like a gentle wave, not a cliff. Below it I wrote, "This is the cost of playing fair." Back home, dusk pooled in the corners. I lit a lamp but left the monitors dark. Ceremonial respect for the max loss rule. Dinner tasted less like defeat than I feared. Later, sprawled on the sofa, I flipped through that chess endgame book again. A diagram showed 2 grandmasters repeating near identical moves for 26 turns, neither willing to overextend. The annotation read, "To concede half a point is progress if the alternative is self-destruction." I laughed out loud. The ceiling seemed to nod in agreement. Thursday dawned. I performed the ritual. Window, coffee, breath. And reopened the platform with hands steady. Another loss printed early, 7th in a row. Yet something inside had shifted. The red number triggered curiosity, not crisis. I checked my stats. Longest prior losing run during the rebuild had been 5. New territory. But not a breach of edge. I logged it, reminded myself of sample size, and pressed on. Second trade that morning finally found traction. It inched to target, chalking a gain barely larger than a single loss but monumentally larger in psychological weight. I didn't cheer. I just exhaled, noted streak broken, and shut the platform though one trade remained available. Protect the craft. Friday finished flat. 1 small win, 1 small loss. Ending the week at -1.7%. 7 reds, 2 greens, 1 flat. By my old standards a disaster, by rebuilt standards, a textbook demonstration of risk integrity. I printed the equity curve. The dip looked shallow. And temporary. Against the slope of 6 prior weeks. On the margin I wrote, "Confidence lives here, not at the peak." That night I met friends for ramen. Someone asked casually, "How's the market treating you?" I sipped broth, felt the steam fog my glasses, and smiled. A real smile, unweighted. "Teaching me patience," I said. It sounded almost like gratitude. And in that moment I realized the test had passed, not when the losing streak ended, but when the red wave came and I didn't drown in it. I walked home under a half moon, thinking about next week's sessions. There would be fresh tests. News shocks, envy triggers, sudden boredom. But I carried a new rhythm in my bones. Wait, act, record, release. The monster hadn't vanished, it had simply lost its command voice. And that, I knew, was how a trader keeps living to trade again. One red day, one deep breath, one quiet promise at a time. Would you like me to move into the closing chapters? Reflections on longevity and the reasons I trade now. Or expand further on subsequent challenges? Chapter 8. Discovering the edge and boredom. Monday returned with gray drizzle and muted futures chatter. Exactly the sort of morning that once made me itch for excitement. The prior week's red stretch lingered like a scab. Healing, but tempting to pick. I'd survived the test, yet calm felt fragile, as though one stray headline might knock me back into that frightened urgency. I opened the platform, reduced brightness, and let the 5-minute chart of the SAMP settle into view. Price drifted sideways, volume a whisper. My old self would have called it dead. Now I called it probability at rest. I set the 30-second timer not because an impulse roared, but to remind my brain who dictated pace. When the digits hit 0, I exhaled and began the work. Mark pre-market highs, draw the support band, note overnight VWAP. Mundane strokes of preparation that stitch a trader to reality. Nothing happened. 10 minutes, then 20. My coffee cooled. Fingers tapped the desk, but I kept them off the mouse. A flicker of boredom rose. Its language sly. Surely a quick scalp on crude would wake you up. I recognized the voice, not frantic anymore, merely persuasive. I reached for my notebook instead of a new chart and wrote. Boredom, the market inviting you to save bullets. The sentence looked like a koan. I underlined it twice. At 10:12 a.m. price nudged my support band, printed 2 tight doji candles, then leaked lower. Invalidating my long setup before it even triggered. A year ago I'd have forced that entry. Today I felt a small thrill. Dodging a bullet is its own profit. I logged the observation. Patients paid $0 but saved at least one, or lunch hour arrived still flat. I stepped away, microwaved leftover curry, ate standing by the window. Clouds parted, a spear of sunlight caught dust motes dancing in shafts. I realized I was smiling at nothing. Content to wait, unburdened by the need for action. Back at the desk, the afternoon produced a single qualifying pattern. I entered, risk tiny. Price ambled to target over 45 uneventful minutes. I logged the trade with dry factual notes, closed the platform, and stared at the Pandal column. Plus 0.18%. A whisper tried. That's barely a rounding error. I counted aloud, and 0.18% inside risk beats every thrilling meltdown you ever engineered. The room echoed with quiet agreement. Evening gym session, protein stir fry, a chapter of that chess book, early bed. No screen glow, insomnia. Lying in darkness, I replayed the day's strongest sensation. The stretch of bored waiting before the loan setup. It dawned on me that the boredom itself was where edge lived. Because most traders, including past me, cannot tolerate it. They fill the void with subpar trades, surrendering edge to impatience. By doing nothing, I harvested tiny asymmetric advantage. Boredom wasn't empty, it was profitable silence. Tuesday, same slate gray sky, same sideways open. This time I welcomed the lull like an old friend. While candles inched, I reread journal passages from my impulsive era. Pages fevered with FOMO and regret. The contrast felt jarring, as though I were reading letters from a stranger. Mid-morning I executed one quick loss, one quick win, net flat, the graph inched sideways. Satisfaction bloomed anyway. Mid-week I met my mentor on Zoom. A retired prop trader who'd once told me, your real edge will be psychological routine, not secret indicators. I shared my recent streak, the boredom epiphany. He chuckled. Congratulations, he said, you just discovered professional trading. Long stretches of discipline, nothing punctuated by brief moments of precision. His smile carried the warmth of confirmation, not condescension. Guard that boredom like treasure, he added. It's where amateurs pay you. Thursday morning, Twitter trended with meme stocks rocketing 40% intraday. Timelines lit green confetti, my feed pulsed temptation. But I'd unfollowed the loudest voices weeks earlier, a preemptive firewall for envy. I glanced once at the chart. Parabolic thrill ride. Then minimized it. My market continued its quiet drift, my plan remained unchanged. I felt neither superior nor deprived, only certain that chasing someone else's carnival would cost me the serenity I'd fought for. Friday's closing bell found my equity curve marginally higher. 0.6% on the week, a decimal that once would have offended my ambition. Now it looked like structural integrity. Brick laid on brick, boredom as mortar. I printed the updated curve and pinned it beside the week earlier dip. 2 lines, one down, one flat up, composing a shape that spelled resilience. On a sticky note I penned the week's lesson. Edge mastery of uneventful minutes. That night I walked the river path, city lights glimmering like low volatility candles. I thought about all the hours I'd squandered seeking fireworks and sudden redemption. The greater miracle, I realized, was discovering fulfillment in monotony. Because if you can love trading when nothing happens, you're free. Free from drama, from the whip of urgency, from the lie that meaning arrives only in explosive moves. Back home, the platform slept. I left it dark, content to let boredom. And the quiet edge it carried. Rest like a bookmark in a story I no longer raced through. Next week would bring new charts, new lulls, new subtle tests. I felt ready, not with hunger, but with the steady appetite of a craftsman returning to his bench, eager to sand one more plank smooth. Chapter 9. When life invades the screen 3 months into the comeback, my routine felt balanced enough that I almost forgot how fragile steadiness can be. The markets cooperated with gentle ranges and occasional bursts of orderly momentum. My rules held like fresh mortar. Then, without warning, real life barged through the door in a way no chart could forecast. It was a Tuesday, pre-market still yawning awake, when my phone lit up with my sister's name. I rarely answered calls that close to the open, but something in my gut said pick up. Her voice cracked. Our mother had slipped on black ice, shattered her hip, and was headed into surgery within the hour. I froze. Candles, levels, risk metrics. Every familiar anchor vanished. What mattered was a hospital 300 kilometers away and the sudden awareness that I hadn't visited in months, always too busy chasing ticks. I stared at the screen. Charts waiting, notebook open, timer set. While my sister gave details between sobs. I murmured assurances, hung up, and felt an old reflex surge. Keep trading. Hit daily target quickly, then drive to the hospital. Efficient, right? But a second, calmer voice rose. One I'd cultivated through weeks of boredom discipline. Nothing on this screen is more important than where you're needed. I toggled the platform to simulate only, a safety switch I'd never used live, and shut it. Then I printed a single page showing my current equity curve. I folded it, slipped it into my wallet. A small reminder that the market would still be there tomorrow. And began packing an overnight bag. The drive north threaded through sleet and radio static. My mind kept replaying price zones, as if the sand cared about hospital corridors. Each mental detour ended with the same mantra. Craft serves life, not the other way around. It felt awkward on my tongue, but truer than any trading aphorism I'd memorized. At the hospital, time stretched elastic. Surgeons talked in calm jargon, monitors beeped, arrhythmic coffee tasted of burned patients. I dozed upright in a plastic chair, equity curve folded in my pocket like a forgotten lottery ticket. When Mum finally emerged. Groggy, pale, alive. Market hours were long closed. I held her hand, thinking how many years I'd measured success in pips while neglecting moments that never reprint. Her fingers squeezed mine with surprising strength. No ticker ever moved me so. Over the next week my schedule inverted. Dawn found me helping nurses reposition pillows instead of measuring ATR. My trading laptop stayed zipped in a case, rules taped to the lid like a do not disturb sign. Oddly, I missed the charts less than I feared. Each day ended with the same ritual. Walk to the hospital cafeteria, open the notebook, jot a single line. Tuesday. Edge today, patience with discharge bureaucracy. Thursday. Managed risk by delegating tasks to sister. They were jokes, but also reminders that principles of discipline transcend the screen. The market, of course, marched on. 2 strong trend days I would have loved, a whipsaw session that would have tested me. I could have traded from the ward on my phone, but breaking my own hierarchy. Life first, market second. Felt like a bigger loss than missing moves. I allowed the feeling of FOMO to crest and fall untouched, like watching wind ruffle hospital curtains. 9 days later Mum was stable, physical therapy scheduled, dignity intact enough to shoo us home. The evening before we left, she patted my hand. You work too hard, love. Promise me you'll rest sometimes. I laughed. Her telling me that. But nodded with a seriousness she deserved. Back in my apartment, the platform icon glowed like a portal to another dimension. I hadn't touched it in over a week. Heartbeat ticked faster. Not with urgency, but with curiosity. Had the absence dulled skill? I powered up, switched to sim for one additional day. Charts felt oddly familiar, like a language remembered after months abroad. I processed market structure, plotted levels, executed 2 practice trades, both winners, though small. More important. My mind remained still, pulse even. The craft hadn't rusted, it had rested. The following morning I returned live. 1 modest trade, 1 modest gain, notebook note. Re-entry smooth, gratitude high, stakes unchanged. The equity curve resumed its gentle climb, the hospital episode barely a measurable dip in capital, yet a profound spike in perspective. That weekend I added a new clause to the essential column. Suspend trading immediately for family emergencies. No self-permission required. Discipline wasn't just controlling impulse within markets, it was knowing when to close the laptop and step into life unencumbered. I realized then that resilience isn't built solely by surviving losing streaks. It's built by weaving trading into the larger fabric of living. Accepting that screens must dim, sometimes abruptly, and trusting that edge remains when you return. The market forgives absence, regret is less lenient. Mum's recovery would be slow, but steady. Another chart to measure over months. Each visit home became a checkpoint where I practiced patience of a different kind, cheering incremental progress the way I once cheered daily Pandal. The 2 journeys mirrored each other. Small gains, occasional setbacks, discipline in therapy and in trades. Some nights, reviewing both curves. Account and rehab milestones. I felt a quiet satisfaction deeper than any single win. Proof that a trader's best edge might be the capacity to pause, to prioritize, to return wiser. And in that realization, the line between life and screen blurred. Not in competition, but in harmony, each teaching the other the rhythm of sustainable progress. Chapter 10. When the market finally rewarded patience, it happened on a Tuesday in late spring, the kind of morning that slips past without ceremony. Gray sky bleaching toward blue, commuters half awake, futures balancing on an invisible fulcrum. I'd been back in rhythm for almost 2 months since Mum's surgery. 1 or 2 trades a day, strict size, equity curve inching north like a careful hiker. Pre-market news whispered about a surprise rate cut rumor, but the tape stayed muted. I marked levels, brewed coffee, set my 30-second timer, and waited. An hour crawled by. Nothing but shallow oscillations that would once have driven me mad. I felt only a mild, almost pleasant boredom. Kraft had taught me that boredom is the toll booth on the highway to edge. Then, at 10:02, the market inhaled. Volume bloomed on the tape, candles lengthening like shadows at sunset. The central bank statement hit the wires. Cut confirmed, deeper than expected. My chart surged, price vaulting through resistance I'd drawn days earlier. The move was clean, decisive, no whipsaw theatrics. A perfect momentum pullback began to form. Old me would have punched in the second price tick turned green. But habit held. Breathe, confirm, document. I typed entry, stop, target with fingers steady enough to surprise myself. When price kissed my zone, I clicked buy. The fill popped almost instantly, and the market accelerated like a sprinter hearing the gun. Within seconds the trade floated well into profit. The curve of the candle felt like a reward not just for this setup, but for every small, unremarkable decision I'd honored over the past months. Walking away on max loss days, tolerating boredom, closing the laptop to sit in hospital corridors. The screen flashed numbers I usually hide, yet this time a glance showed multiples of my daily goal stacking with each uptick. Adrenaline pricked at the edges of my calm. Take partials, lock it, don't let it slip. But I checked the plan. Target pre-defined at prior macro resistance, trailing stop after first profit tier. No deviation. Price carved upward in orderly waves, tapping the first target. I trimmed a third, slid stop to break even, breath slow but not shallow. Minutes later the second tier filled. The remainder I let run, trailing beneath each new structure like stitching a kite string to wind. For 40 minutes the market rewarded every ounce of patience I'd banked over dull weeks. An uninterrupted glide that felt almost gracious. When my final stop triggered, I leaned back and stared at the realized pandal. More in one session than I'd made in any prior week of the rebuild. Yet the rush I expected never hit. Instead there was a warm, grounded acknowledgement. This is what capacity looks like when it's not being hijacked by ego. I closed the platform. Could have kept trading. The day was young. But the rule was clear. After a large or multiple, step away. I walked 2 blocks to a cafe, ordered an espresso, and sat on the patio where sun finally cracked the cloud cover. My hands trembled. Not with panic, but with surplus energy that hadn't erupted in months. I sipped slowly, letting the streetscape soak in. Cyclists weaving past taxis, a florist arranging tulips, distant sirens doppelering into silence. Notebook open, I wrote. Today's win grew from yesterday's stayed modest, process stayed market paid for patience do not charge at interest tomorrow. I underlined the last line twice. The next morning headlines buzzed about traders who had doubled or tripled accounts overnight. Stories of size, bravado, luck. The envy meter registered a flicker, then died. My curve now showed a graceful leap, but I saw it as an outlier built on many tiny bricks. One day's fortune couldn't justify abandoning the architecture that made it possible. That week ended with 3 trades. The Tuesday runner, a small Wednesday scratch, a modest Thursday gain. Friday I took none, nothing met criteria and I felt no hunger to force it. The equity curve now bent upward more steeply, yet its most valuable feature remained the smoothness preceding the bend. Saturday I visited Mum. We walked the rehab garden where lilacs nudged the air with sleepy perfume. I told her, in simplified terms, about the big day. She squeezed my arm and said, "You never know when the garden will bloom if you keep watering it." I laughed. She'd never placed a trade, yet captured the entire philosophy in one sentence. Driving home, I realized the breakthrough wasn't the profit. It was the proof that restraint and readiness can coexist. Weeks of quiet watering, one day of sudden blossom, and the discipline the next morning to pick just enough flowers, not uproot the entire garden. Back at the apartment, I pinned the updated curve beside the others. Gentle slopes, one proud spike, then gentle again. Beside it I wrote, "Reward days are rented, not owned. Pay the rent with patience." And with that note, I shut the notebook, powered down the screens, and stepped into evening content that the market had spoken. And that, for once, I'd answered in a language free of craving. Chapter 11. Coasting isn't an option. The Tuesday windfall felt like a gentle tail current, pushing my equity curve into rarefied air. Wednesday and Thursday had proven I could return to ordinary size and rhythm without chasing encore fireworks. By Sunday night I'd framed the week as a case study in winning well. But a faint unease crept in with the sunset, as though my subconscious feared I might treat the breakthrough as a cue to relax. I recognized the pattern. Every past surge had lured me into coasting. The logic seemed harmless. You just banked a month of gains in one day, surely you've earned a light week. Yet complacency always mutated into sloppiness, then into that slow, sly unraveling where rules softened and vigilance dulled. I resolved not to mistake progress for finish line. Monday. A subtle shift in tone. Pre-market price action drifted like smoke. My checklist required clarity, but confidence from the prior week made the drift look tradable. A small voice suggested pressing an experimental long. Nothing ruinous, just exploratory. I felt my cursor inch toward the order ticket, heartbeat steady yet purposeful, the way it does before mischief. Timer rule. 30 seconds. I hit start. During the pause I noticed two things. 1. The setup was genuinely absent. 2. I was rationalizing out of boredom, not edge. When the timer beeped, I clicked cancel, took a sip of water, and wrote in big block letters. Coasting begins when vigilance ends. The chart meandered lower minutes later, vindicating the pass. Morning turned to early afternoon with 0 trades. A flicker of guilt surfaced. Am I wasting opportunity? I flipped to my equity printout on the wall and traced the gentle slope with a finger. Growth depended on what I didn't trade as much as on what I did. I closed the platform at 2 p.m., hiked the Riverside path, and called Mum. Her laugh through the speaker felt higher value than any micro scalp I'd foregone. Tuesday. The seduction of let it ride volatility rose at the open, carving a near perfect pullback. I entered, sized standard. Price surged. First target hit. Runner portion rode momentum. Trailing stop dragged behind healthy structure. Textbook management. Then price spiked again, doubling unrealized pandal. My throat warmed with that old gambler's thrill. Move the stop wider. This could be another Tuesday miracle. Finger hovered. A second voice. The disciplined one. Argued. Yesterday you swore vigilance. Today you want to rewrite stops mid-trade? The memory of red ink spirals flashed. I kept the stop. 10 minutes later a sharp reversal sliced through structure, tagging my level to the tick. Trade closed green, but far short of the tantalizing peak. Ego whined. Discipline exhaled. I screenshot the chart and scribbled beneath. Profit left on table is tuition for staying systematic. Then I shut the platform, those setups continued to form. Protect the craft. Wednesday. The false comfort of passivity midweek, markets entered a smooth grind. My system flagged 2 setups. Nerves felt muted. Yet I hesitated, telling myself I was prudently selective. In truth, I feared giving back the big gain. A new form of complacency disguised as caution. Skipping valid trades on fear of red is coasting in reverse. I forced myself to take the second signal. Price chopped, hit stop. First losing day since the windfall. The loss was fractional, but the lesson oversized. Discipline means accepting small, inevitable setbacks instead of hiding from them. I closed the platform at break-even net and took a long walk, reminding myself that risk is the admission fee for staying in business. Thursday. Reloading discipline. I began with a revised micro ritual. Before power up, speak the essential rules aloud, like a vow renewed daily. It felt awkward, but the audible declarations shaved off the mental fuzz of complacency. 2 trades executed flawlessly. 1 target, 1 scratch. Equity curve edged higher by a whisper. Boring felt brilliant. Friday. Audit and affirmation. On the 5th morning I printed the week's chart overlaying equity and rule compliance metrics. 3 insights emerged. Compliance rate 96%. 2 minor infractions, neither monetary. Net pandal plus 0.4% despite 1 full losing day. Psychological volatility low. 0 revenge impulses, 0 size creep. I pinned the audit beside the big win statement, a visual reminder that sustainable progress is a mosaic of restrained decisions. No piece impressive alone, but powerful together. That evening I met an old trading buddy who still chased home run Fridays. Over beers he boasted about doubling size after my rate cut rally, only to cough up half by week's end. He shrugged. Easy come, easy go. Next week we swing bigger. I listened, empathy tinged with déjà vu. In his story I heard an echo of the trader I used to be. The one who mistook momentum for mastery, pop for permanence. Walking home, city lights reflecting on wet asphalt, I murmured gratitude for boredom, timers, and the quiet curve. At the apartment I added a new line under essential. Great weeks change, nothing, rules remain. I closed the notebook, eyes lingering on the words until they felt stitched into habit. The market would tempt coasting again. Through windfalls, through ennui, through an endless carnival of opportunities. But now vigilance had its own ritual, its own muscle memory. Coasting wasn't merely forbidden, it was irrelevant to the identity I was carving. Trader as craftsman, momentum humble to method. And with that, I powered down, letting the screen fade to black. Satisfied that darkness, like discipline, was a tool I could wield whenever clarity asked for rest. Chapter 12. Flatlining and maintaining focus. Summer drifted in on a wave of blandness. The sand tightened into the narrowest weekly range I'd seen in years. An accordion pleated so tightly every candle looked cloned. The financial press coined it the Great Summer Stall. For discretionary traders chasing range expansions, it was purgatory. For algorithmic scalpers, perhaps a steady trickle. For me, it felt like a stress test of patience more than skill. The first week, I barely noticed. One scratch here, one micro gain there. Nothing remarkable, but nothing alarming either. By Friday, my curve looked like a heart monitor gone flat. Tiny blips, zero altitude. I shrugged and told myself, edge lives in restraint, this, too, will pass. The second week carved an identical silhouette. Pre-market scans produced setups that met every technical criterion yet died of suffocation the moment I clicked in. Twice I watched price drift 10 ticks shy of target, reverse, nibble my stop, then drift back to target after my exit. Malicious déjà vu in slow motion. No rule was broken, but a subtle resentment grew, a whisper. Why bother if nothing moves? Wednesday afternoon I closed the platform early, walked to the river, sat on a sun-warmed bench, and tried to name the emotion. It wasn't fear, drawdowns hurt more. It wasn't greed, there was nothing to chase. It was restlessness. A hunger for feedback, proof I was progressing. I realized markets had taught me to equate motion with meaning. Stillness felt like fading. That night I opened the notebook and drew a flat equity line. Beside it I wrote, "Plateaus are progress growing its roots." The phrase sounded like something a Zen gardener might say, yet it rang true. Trees don't shoot skyward every day, sometimes they channel energy into unseen rings of strength. The third week arrived, range even tighter. My timer beeped hourly to remind me to stretch, a safeguard against screen stupor. With nothing to trade, I turned to statistics. I downloaded 6 months of my disciplined trades and calculated expectancy under various volatility regimes. The exercise was mind-numbing. Cells, filters, pivot tables. But the result startled me. In low ATR environments my edge was near zero, positive by a hair but not worth the emotional capital spent waiting. I wrote one declarative sentence on a fresh page. Stand aside when the engine idles. Then I drafted a volatility filter. If the 14-day ATR fell below X, I would reduce size by half and cap at 1 trade per session. If it fell below Y, I would simply not trade. Simple gates, mechanical, immune to boredom's persuasion. Implementing that rule felt like exhaling. The next day's ATR printed below the stand-aside threshold. I opened the platform, confirmed the reading, and closed it again, timer unused. The sudden expanse of free time felt illicit. I filled it with a cycle ride to the outskirts, where wheat fields undulated under hot wind. Pedaling hard, I felt my thighs burn, lungs stretch. Sensations charts never give. The plateau in my pandle paralleled new contours in my quadriceps. Progress, just elsewhere. Late July heat thickened. 2 full weeks passed without a live order. Each morning I performed the ritual. Coffee, breath, chart check, ATR filter. Then closed the screen and turned to life. Books half finished, friendships half neglected, guitar chords half learned. The equity curve flatlined, my days expanded. Occasionally envy pricked when social media feeds flaunted gains from spike chasers in microcap land. I answered with a glance at my wall printout. Steady slope, modest spike, protective plateau. The storyline stayed intact, comparison didn't change statistics. When August's first Monday arrived, ATR finally ticked above my tradable gate. I reopened the platform fully and felt a mild rush. Less like gambler's thrill, more like an athlete cleared to compete after rehab. That day produced 2 disciplined wins, small but decisive. The curve nudged higher, a new stare after the long landing. I smiled, not at the dollars, but at the confirmation. The system had carried me through inertia without bleeding cash or spirit. That evening I biked to Mum's, found her on the patio practicing careful steps with a cane. She grinned, waved me over. You still making your millions? She teased. I laughed. Some days I make silence instead. Her brow furrowed playfully. Is silence profitable? I thought about those flat weeks. The walks, the day to work, the wheat field rides. In its own currency, I said, yes. Driving home beneath a sky streaked mauve and gold, I realized flatlining hadn't stalled growth, it had deepened roots, disciplined impulses, reaffirmed that stepping aside can be a trade. An anti-trade that protects the account and the mind. The equity curve would rise again, fall again, wobble in endless patterns, but the plateau would remain a quiet badge, proof that progress sometimes sounds like absolutely nothing at all. Chapter 13. The temptation of expansion. Plateaus, I discovered, are fertile ground for new temptations. Once the silence of flat weeks settled into a rhythm, an ambitious voice stirred. If you can handle boredom this well, surely you're ready for more markets. It began innocently. An evening scroll through global index heat maps. The DAX hummed with a volatility uptick. Crude oil printed a clean weekly trend. Crypto, once my reckless playground, looked tamer after its winter purge. I told myself I was only observing, sharpening pattern recognition. Yet each flick of the ticker will seed a subtle itch. Imagine adding just one more instrument. Think of the diversification. I drafted a mind map of possibilities, professional-looking arrows connecting time zones, ATR averages, margin requirements. It felt strategic, adult. But underneath bloomed the same old hunger for motion, now disguised in managerial language. Expansion, portfolio breadth, scaling the business. Monday. Dipping a toe. I gave the new rule a name. Cautious exploration. And allowed myself to paper trade the DAX while trading S-Liv. In Sim I nailed 2 textbook pullbacks, green figures glowing temptingly beside the flat real money column. My ego perked. See? Transferable skill. I ended the session smug but safe, notebook entry reading. Sim profit plus 1.3 are valuable data. Tuesday. The first crack. London Open overlapped my coffee ritual. DAX candles swung like playground seats. Without waiting the full adaptation period I'd promised, I flipped the toggle from Sim to Live. Just a quarter-size position, risk trivial. The setup looked perfect. Price steamrolled to target in minutes. Real money green blinked on the dashboard. I felt the dopamine hit I hadn't tasted since the rate cut rally. Expansion felt inevitable now. Almost responsible. But the second trade reversed hard, clipping my stop, netting the pair near zero. Not catastrophic. Except for the whisper. Double the size next time to compensate. I jotted the impulse in the margin and underlined it. Ego flag. Then I shut the DAX chart for the rest of the day. Wednesday. Data over drama. Before dawn I revisited 6 months of DAX statistics, overlaying my S expectancy. A glaring difference leapt off the sheet. News whips in Frankfurt session tripled stop-out frequency for my pattern. Translation. My edge existed, but narrower and twitchier. The temptation was real, the margin for error razor thin. I wrote a new test rule. 10 session probation in Sim, full journal, no live trade until equity curve in S stair steps higher by 2%. Expansion contingent on core stability. Bureaucratic? Absolutely. But bureaucracy is how you hobble a runaway ego. Thursday. The challenge arrives. S opened with sluggish drift. DAX, in Sim, produced 2 rapid-fire winners that would have posted a chunky live profit. Twitter sang praises of Euro session alpha. My stomach tightened. The screen seemed to glow hotter, the mute chart screaming, "You're leaving money on the table." I reached for the timer, but this wasn't an impulse, it was a calculated longing, harder to dismiss. I opened the forbidden column on the wall. Trading new market without probation period. There it was, glaring. The rule existed precisely for moments like this. I exhaled, closed DAX windows, and spent the hour annotating why the rule mattered. Boredom gnawed, but the satisfaction of integrity tasted thicker than any hypothetical profit. Friday. The reward of restraint. ATR in S expanded modestly. A clean setup delivered a tidy 0.8. Our equity curve nudged past the 2% gate. Core stability achieved. Yet by then, the allure of immediate DAX entry had cooled. I realized the real prize of the week wasn't permission to expand, it was proof I could throttle ambition until it aligned with process. I reopened the DAX chart in Sim and tagged every would-be trade with color codes. Green for pattern perfect, amber for marginal, red for revenge impulse. The palette revealed an uncomfortable ratio. Only 4 of 12 Sim entries truly met criteria, the rest were noise I'd rationalized. Expansion could happen, yes. But only if I first elevated selectivity to match the faster market. Weekend debrief. Saturday afternoon, I laid the week's printouts on the dining table. S equity curve steady, DAX sim blotchy. Beside them I set the endgame chess book, open to a note I'd highlighted weeks earlier. Grandmasters add complexity only after mastering simplicity under time pressure. I copied that line into the notebook, then added. Mastery is not maximal, it's modular. Each new module. New market, new size, new strategy. Must click into the existing architecture without wobble. Otherwise the whole structure tilts. I drafted a phase plan. Phase 1, continue only log 10 additional sessions of rule perfect trading. Phase 2, parallel DAX in sim for 30 sessions measure expectancy. Phase 3, introduce live DAX at half risk, contingent on S equity slope above moving average. Review, if discipline cracks at any phase, revert to previous module. No intercoursey leaps, no fireworks. Just Lego bricks clicking into place. I felt a quiet thrill, not of expansion, but of design. That evening I texted my mentor a snapshot of the phase plan. He replied with a single sentence. Scaling is a process, not a feeling. Well done. His approval warmed me more than Tuesday's fleeting DAX win. I closed the day with guitar practice, fingers fumbling a new chord progression. Another expansion, but at a pace respectful of skill. The parallel was obvious and comforting. As night settled, I glanced once at the dormant monitors. The temptation to light them up remained, like a distant hum. Yet now I carried a blueprint. Proof that ambition could be shaped by arithmetic instead of adrenaline. Coasting wasn't an option, true. But neither was sprinting blind. The path forward lay between. Deliberate steps, boredom embraced, modules added only when foundation stones refused to wobble. In that narrow corridor, I sensed, resilience might finally stretch into longevity. Chapter 14. Sustaining growth through setbacks. The phased expansion plan looked elegant on paper. Tidy columns, contingency arrows, risk caps. But markets, like life, delight in bending blueprints. 2 weeks into phase 1 I'd chalked 10 more S sessions without a single rule breach. The curve slanted upward at a satisfyingly shallow angle. Green light. Advanced to phase 2. I opened a fresh simulator workspace for the DAX, color-coded entries, journaled emotions with the zeal of a lab technician. First fortnight. Expectancy positive, win rate modest, discipline solid. I felt ready. Maybe even overdue. To nudge risk from paper to pennies. Phase 3 began on a drizzly Monday at 7:00 a.m. London time. Half risk live trade, textbook pullback. Target hit in 6 minutes, platform flashing a small but real euro amount. I grinned at the novelty. Profits arriving while New York still slept. The next 3 days copied the first. Cautious size, efficient exits, green each dawn. By Thursday noon my confidence swaggered, though my rules said hold steady for 20 sessions before increasing size. Friday's pre-market delivered a chart that looked like every dream setup I'd archived. Deep retrace into a demand zone confluence with high timeframe trend. Without hesitation I placed the order. But I clicked full size, not half. A voice whispered, prove you're ready. Price filled, spiked in my favor. Then snapped back like a sprung trap, slicing through my stop in seconds. Loss. Twice the intended risk, because in my haste I'd forgotten EU session volatility spans wider ticks than S. Heart thudded. I sat motionless, cursor vibrating over the revenge button. Instead of smashing buy, I punched the 30-second timer so hard the phone skidded. The alarm chirped. Breath slowed. Rule breach noted, but damage contained. One oversized loss, account intact. I closed DAX charts for the day, shifting focus to S. New York Open greeted me with a familiar pattern. Small long trigger. I entered, risk normal. Halfway to target, a breaking news headline scrolled. Surprise tariff threat. Futures plunged. My stop, set precisely, fired. Loss number 2. My week's candle, once comfortably green, now leaked red. The urge to fix the week coiled like a spring. I stared at the essential column taped to the wall. Maximum 2 live losses per day across markets. The rule glowed like a stop sign. Obeying it meant finishing the session. And the week? Down. The rationalizer in my head argued. One more careful trade could erase half the drawdown. Discipline answered. Or double it. The room felt like a courtroom. I chose the gavel of silence, shut the platform, and pushed away. Outside, drizzle had thickened into steady rain. I walked aimlessly, letting water seep into trainers, each sodden step a metronome for regret. Full size on DAX. Why? Pride, plain and simple. I'd treated 4 small wins like validation instead of variance. The setback wasn't the loss, it was the breach. Back home I printed the week's equity curve. A graceful ascent clipped by a sudden dip. I pinned it beside earlier lines and wrote in red marker. Growth isn't cancelled, it's tested. Then underneath, smaller. Setbacks are rent for bigger apartments. Saturday morning I rang my mentor, confessed the size lapse. He chuckled, said, "Congratulations. First tuition payment in the new market. Cheap, if you learn." He suggested a recovery ritual. Shrink both markets to 3/4 size for 10 sessions. Punishment? No. Just a reminder that ramping back up is earned. Sunday evening I reviewed every DAX trade. Sims, wins, the oversized loss. I noticed a pattern. My best decisions came after at least 15 minutes of observation. The big loser was entered within 3 minutes of loading the chart. Impatience wore a new disguise. Familiarity bias. I drafted an additional rule. Minimum 5-minute observation before any DAX order. A speed bump for the mind. Monday returned. I felt the bruise of Friday's dip but not the break. Halfway through the London session a near-perfect setup formed. I waited 5 minutes. Timer visible, palms damp. At 4:59 I noticed a micro divergence in momentum I'd have missed before. Setup invalidated. No trade. 20 minutes later the market flushed through what would have been my stop. I exhaled relief. Rule saved capital, but more importantly saved confidence. 10-session probation rolled by. 7 DAX trades, net small positive, all within reduced size and observation buffer. S marched along its quiet path. Combined curve clawed back the Friday dent and edged higher. Slower, sturdier. On the last day of probation I printed the updated equity graph. The dip now looked like a learning notch, not a derailment. I penciled above it. Setbacks sustained, growth sustained. System validated. That night I lay in bed, listening to late summer crickets, grateful for the loss that arrived early, before size ballooned. Sustaining growth, I realized, is less about accelerating gains and more about metabolizing setbacks without metabolic shock. The process, vigilantly ordinary, is the real expansion. With that thought I drifted to sleep, charts dormant, discipline awake, ready for whatever test the next chapter would script. Chapter 15. Longevity over glory. A year had passed since the November morning I nearly powered down for good. 12 months of small wins, contained losses, plateau stretches, and that single electrifying rate cut rally. When I overlaid every equity printout. The dips, the slow inclines, the one proud surge. The curve resembled a mountain range seen from a distance. Ridges and ravines blending into one gentle ascent. It was not the portrait of a prodigy. It was the landscape of longevity. I noticed something odd in myself that anniversary week. A soft detachment from the idea of making headlines, whether on social media or in my own private monologue. The fantasy of glory. Doubling my account in a quarter, landing on podcasts as the turnaround kid. Had gone quiet, replaced by something simpler but sturdier. Each new session felt like adding a brick to a wall I intended to live behind for years. No single brick dazzled. But take one away and the structure weakened. Keep stacking and it became shelter. Monday's London Open brought the usual algorithmic jolts. I sat at the desk, timer ready, rules taped in clear view, yet the urgency that once buzzed under my skin was gone. My setup appeared 20 minutes in. I executed, target filled, platform pinged a modest gain. The sound triggered no dopamine burst. Instead it felt like hearing the kettle click off. An everyday signal that one small task had completed. I closed the platform. One trade was enough. The markets would not remember my restraint, and that was exactly the point. I spent the afternoon coaching a friend who'd just blown his first account. His story was my echo. Early hot streak, ego inflation, sudden wipeout. We sat in a coffee shop where sunlight pooled on scratched tables, and I walked him through my wall chart of essential, optional, forbidden. He expected magic indicators. I offered boredom, discipline, and a 30-second timer. He frowned at the plainness of it, then nodded with the kind of humility I'd once resisted. Passing on the lessons felt strangely richer than a green day. Thursday evening I joined my sister and Mum for dinner. Mum still carried a slight limp, but she insisted on cooking, leaning on the counter between stirring. We ate slow, laughter softening the room. A year ago I would have slipped away mid-conversation to glance at after-hours charts. Now the desk lamp stayed dark. My sister teased, "Look at the Zen trader." I shrugged, smiling at the label. If Zen meant the ability to leave screens idle without twitching, I'd earned it. That night, back in my apartment, I opened the journal to a fresh page and asked a question I hadn't dared voice before. What does success look like in 10 years? The answer arrived unhurried. It wasn't a number. It was a rhythm. Waking with clear purpose, taking trades that align with edge, shutting down when probabilities fade, living the rest of the day in Technicolor rather than grayscale screen glow. It was being present at future family crises without wondering how many points the market moved while I held a hand in a hospital. It was mentoring others without needing their awe to bolster my own confidence. It was an equity curve that might never rocket but also would never crater from self-inflicted sabotage. Friday's session offered one more lesson in contrast. A macro data release whiplashed price 3% in minutes, social feeds igniting with screenshots of jackpots and implosions. I watched the chaos from the sidelines. My volatility filter had flipped to stand-aside mode before the fireworks. For a heartbeat the old spark fired. Imagine the gains you skipped. But then I pictured the alternative timeline. Adrenaline surge, timer ignored, rule bent, weekend spent stitching ego back together. I closed the feed, brewed tea, and felt the thrill of dodging drama. That evening I printed the year-long equity curve and pinned it at the very top of the corkboard. The line climbed from lower left to upper right, never steep, never flat for long, annotated with tiny notes. Almost quit, rate cut rally, family emergency pause, summer stall, expansion test. Beneath it I wrote the sentence that summarized the transformation. Glory fades, longevity compounds. I stepped back and let the image imprint. Each moment of restraint had compounded not just capital, but identity. I was no longer the trader who needed the market to crown him extraordinary. I was the craftsman who intended to show up tomorrow, and the next day, shaping routine into reputation. Before bed I powered down the monitor, laid the notebook beside the guitar, and opened the window. City sounds drifted in. The hush of tires, an occasional laugh, the distant hum of trains. Reminding me that the world neither cheered nor scorned my craft. And in that anonymity I found the quietest, deepest success of all. The freedom to keep building brick by unremarkable brick, letting time, not theatrics, reveal the architecture. 12 months ago I sat on the floor of my office, platform dark, wondering if the click that had disconnected me from the market had also severed me from a future I'd spent years chasing. I thought quitting might be the only way to stop bleeding money, pride, and sleep. I thought losing had emptied me. I was wrong. Losing hollowed out the space where something sturdier could grow. In the silence that followed, I heard the faint but unmistakable pulse of the craft itself. Separate from my craving for validation, separate from the scoreboard highs. And that pulse kept time while I rebuilt, brick by uneventful brick. I learned that patience isn't passive, it's a muscle that burns the first time you hold. Boredom is not a void but a moat. Repelling every trader who can't bear discipline is not the steel jaw clamp I once imagined, but a series of gentle gates. A timer, a volatility filter, a rule taped to a monitor. Small barriers that protect big dreams. I learned that life will knock, loudly or softly, and expecting the market to pause out of respect is folly. The platform must dim when mothers fall, when friendships need tending, when dusk smells too much like summer to waste indoors. The charts forgive absence, the people you love may not. I learned that setbacks are not scars on the equity curve, they are rent. Tuition for expanding into larger rooms of competence. If you pay promptly and in full, the landlord of probability grants longer leases. I learned there is no graduation day. The diploma is each new morning you wake and still choose the craft on your terms. That choice is fragile and must be remade, sometimes every minute, sometimes every breath. And I discovered that the market's greatest gift is not riches or adrenaline, it is the mirror it holds to every corner of your character. On my best days now, I no longer trade to escape that reflection. I trade to polish it. If you've walked alongside this story, through the almost quit morning, the red stretches, the summer stall, the quiet surge of the rate cut rally. Maybe you've seen your own flickers of despair and renewal. Maybe you're still in the middle of them. If so, let my curve be proof that glory is optional, longevity essential. Ask yourself, before the next click, are you building a monument to ego, or a bridge to tomorrow? One crumbles under whether the other endures. Tonight my platform rests, rules taped firm, notebook closed, equity curve climbing in patient degrees. The city outside hums its indifferent lullaby, and I feel neither chased by losses nor intoxicated by wins. I feel present. Ready to trade again at dawn. Ready, too, to step away if dawn brings no invitation. Because the secret, whispered only after you almost quit and choose to stay, is this. You do not need to conquer the need, only conduct yourself so well that, win or lose, you can look in the mirror and say, today, I kept the promise. Hold to that, and the curve. Slow, steady, sometimes flat, sometimes rising. Will take care of itself. And whether the world notices or not, you will have become what the market tried to teach you from the first click. A trader whose worth is measured not by glory, but by staying power. Thank you for listening. If this journey has touched your own, I invite you to share one promise you're ready to keep. Small, specific, yours alone. Write it down, speak it aloud, post it below. Let's make the craft lighter by carrying it together, one honest promise at a time.